Mahaba Kaneem, Dei here. Today, we're diving deep into a topic that keeps everyone up at night: why prices just keep going up, and more importantly, how you, yes you, can still become truly rich by 2026, despite it all. The world around us is changing fast, and just holding onto your money under the mattress? That's a recipe for financial regret, my friends. We'll uncover strategies, backed by hard facts, that show real paths to wealth in this new economic landscape. No magic tricks, just smart thinking. First, let's understand our adversary, inflation. The U.S. Bureau of Labor Statistics reported a 3.1% annual increase in the Consumer Price Index as of November 2023, while in the Eurozone, inflation stood at 2.4% in the same period, according to Eurostat. These numbers, while seemingly small, represent a continuous erosion of purchasing power. The cost of living is rising faster than many wages, making traditional wealth-building methods feel like an uphill battle. But remember, where there's a challenge, there's often an opportunity. Why won't it just stop? Economists point to several factors. Supply chain disruptions, fueled by geopolitical events and lingering effects of global shutdowns, continue to push manufacturing costs higher. The International Monetary Fund, in its October 2023 World Economic Outlook, highlighted persistent demand pressures and tight labor markets contributing to core inflation. Central banks face a delicate balance, as aggressive rate hikes risk recession, while inaction allows inflation to simmer. This isn't a temporary blip, it's a new economic reality we must adapt to. In this environment, the gap between the rich and everyone else often widens. A 2023 report by Oxfam indicated that the wealthiest 1% captured nearly two-thirds of all new wealth created since 2020. Asset prices, like real estate and stocks, often outpace inflation, benefiting those who already own them, while wages struggle to keep up. This means the traditional path of working hard and slowly saving just isn't cutting it for many. But don't despair. Dei has observed this pattern before, and he knows there are specific strategies that can help you cross that widening chasm. Let's start with the most straightforward, yet least accessible, path: inheritance. For a select few, wealth accumulation begins not with effort, but with legacy. According to Forbes' 2023 billionaires list, roughly one-third inherited at least part of their fortune. While this isn't a strategy you can actively pursue, it underscores a fundamental aspect of wealth distribution. An inheritance can provide a significant head start, allowing for investments, business ventures, or a more comfortable life. However, Dei warns, even inherited wealth requires smart management to truly grow, especially with inflation eroding its value. But simply receiving wealth isn't enough, managing it against inflation is crucial. A lump sum, say $1 million, would lose nearly $30,000 in purchasing power annually if inflation holds at 3%. Financial advisors often recommend diversifying inherited assets, investing in inflation hedging instruments like real estate, commodities, or inflation-protected securities. The goal isn't just to preserve the principal, but to ensure its real value grows over time. As Dei says, a bird in hand is worth two in the bush, but only if that bird keeps laying golden eggs, even when grain prices rise. For the rest of us, wealth building requires deliberate action. One proven method is excelling in traditional high-income professions. Fields like medicine, law, finance, and specialized engineering offer substantial earning potential. Data from the Bureau of Labor Statistics shows that physicians, for instance, earn a median annual salary exceeding $208,000, while top-tier corporate lawyers can command upwards of $190,000. These careers often require significant education and dedication, but they provide a stable foundation for accumulating wealth, especially when coupled with smart financial planning. This isn't a get-rich-quick scheme, it's a get-rich-steadily plan. However, even in high-paying professions, the real wealth comes from climbing to the top. A junior doctor's salary pales in comparison to a seasoned specialist's. For example, a senior software engineer at a FAANG company can earn $300,000 annually, while a new graduate might start at $120,000. This upward mobility requires continuous learning, networking, and often, taking on leadership roles. The Wall Street Journal reported in 2023 that executive-level positions across various sectors saw an average salary increase of 8% in the prior year, outpacing general inflation. It's about maximizing your human capital. This brings us to a foundational strategy for everyone: disciplined saving combined with smart investing. In an inflationary environment, merely saving cash is a losing game. The key is to invest those savings. A 2023 Fidelity Investments study highlighted that consistent, long-term investing in diversified portfolios, even with modest contributions, significantly outperforms cash savings over decades. The S&P 500, for instance, has historically averaged an annual return of about 10% before inflation, though past performance is no guarantee of future results. Day says, "Let your money work harder than you do." The true magic happens with compound interest. Starting early dramatically amplifies returns. For example, if you invest $500 monthly from age 25, assuming an 8% annual return, you could have over $1.5 million by age 65. Waiting until 35 would net you around $670,000 with the same contributions. This principle, often called the eighth wonder of the world, according to some, is your best defense against inflation. The earlier you begin, the more time your money has to grow exponentially, turning small consistent efforts into significant wealth. Now, for the bold, entrepreneurship. Starting your own business offers unlimited earning potential, far beyond the constraints of a salary. While risky, successful entrepreneurs can generate significant wealth. A 2022 survey by QuickBooks found that 60% of small business owners reported an increase in revenue despite economic challenges. The key is identifying a market need and providing value. This path allows you to control your income, scale operations, and potentially create assets that appreciate independently of traditional job markets. Day believes, the biggest risks often lead to the biggest rewards, but only if you plan meticulously. True wealth in entrepreneurship comes from scaling. Moving beyond a sole proprietorship to a company with employees, systems, and market reach. Consider companies like Meta or Amazon, which started from humble beginnings and grew into multi-billion-dollar enterprises. Even smaller scale, a successful franchise owner or a regional service provider can build substantial equity. The exit strategy, selling the business, is often where entrepreneurs realize their largest gains. Forbes estimates that the average successful startup exit value in 2023 was around $25 million for tech companies. It's about building an asset that can be sold for a premium. Let's compare entrepreneurship to a traditional career. Entrepreneurship, left title. Asterisk unlimited income potential. Asterisk high risk of failure, 50% fail within 5 years, according to SBA. Asterisk autonomy and control. Asterisk asset creation. Traditional career, right title. Asterisk defined income ceiling. Asterisk lower financial risk. Asterisk job security, variable. Asterisk benefits and structure. The choice hinges on your risk tolerance and ambition. One offers stability, the other, transformative potential. Day respects both, but he'll tell you, no great fortune was ever built by playing it completely safe. Welcome to the era of digital wealth, content creation and influencer marketing. Individuals can now build massive audiences and monetize their passions directly. YouTubers, TikTokers, podcasters, and bloggers are creating entire media empires. Forbes reported that top YouTube creators can earn tens of millions annually through ad revenue, sponsorships, merchandise, and direct audience support. In 2023, the global influencer marketing market was valued at $21.1 billion. This isn't just a hobby, it's a legitimate business model. But beware, it requires consistent effort, authenticity, and a thick skin. Not everyone makes it big, but the potential is undeniably there. The key to success in content creation is building a loyal audience and a strong personal brand. This means understanding your niche, consistently producing high-quality content, and engaging with your community. Monetization strategies diversify beyond simple ad revenue to include affiliate marketing, selling digital products, and offering subscription services. A creator with 1 million YouTube subscribers can typically earn anywhere from $2,000 to $40,000 per month from ad revenue alone, with sponsorships adding significantly more. Day observes, in this digital age, your voice can be your fortune, but only if you have something valuable to say. Now, let's talk about the frontier of finance, crypto investing. While notoriously volatile, cryptocurrencies like Bitcoin and Ethereum have created immense wealth for early adopters. Bitcoin, for instance, surged from pennies to tens of thousands of dollars within a decade. It's a high-risk, high-reward environment. A recent analysis by Chainalysis found that early Bitcoin investors who held through volatility saw average returns in the thousands of %. However, the market is also rife with scams and speculative bubbles. Day advises, do your research, understand the technology, and never invest more than you can afford to lose. Navigating crypto requires more than just buying and holding. It demands a deep understanding of market cycles, blockchain technology, and risk management. While some advocate for holding long-term, others engage in active trading. The key is diversification within the crypto space and understanding that not every altcoin will be a winner. Reports indicate that over 90% of newly launched cryptocurrencies eventually fail. This isn't a passive investment, it's an active gamble that requires constant vigilance. Day reminds us, the digital ocean has big waves, so learn to swim before you dive into the deep end. How does crypto stack up against traditional stocks? Cryptocurrency, left title. Asterisk extreme volatility. Asterisk potential for explosive gains. Asterisk decentralized, 24/7 market. Asterisk higher regulatory uncertainty. Traditional stocks, right title. Asterisk lower volatility, generally. Asterisk steady, predictable growth. Asterisk regulated trading hours and markets. Asterisk established legal frameworks. Each has its merits and risks. While stocks provide stability, crypto offers disruptive potential. Diversification across both can be a sensible strategy for those with a balanced risk appetite, allowing you to capture growth while mitigating extreme downside. This path is about excellence, becoming world-class at a highly valued skill. Whether it's a surgeon, a software architect, a concert violinist, or an elite athlete, those at the pinnacle of their field command premium compensation. For example, top-tier specialized consultants can charge upwards of $500 per hour. This isn't about general competence, it's about being in the top 0.1% of your domain. This requires relentless dedication, continuous learning, and often, an innate talent refined over thousands of hours. It's about creating such unique value that you become indispensable. As Day says, when you are truly the best, the world will beat a path to your door, wallet in hand. The idea of the 10,000-hour rule, popularized by Malcolm Gladwell, suggests that mastery in any complex field requires roughly 10,000 hours of deliberate practice. While the exact number is debated, the principle stands: profound expertise demands immense time and effort. This investment pays off not just in skill, but in market value. A specialized AI engineer, for instance, with a decade of experience, can earn double or triple that of a generalist. This path circumvents many market fluctuations because true expertise is always in demand, even in inflationary periods. It's about becoming a human asset, resistant to economic shifts. Now, Day wouldn't be her say Bylan Day if he didn't acknowledge every path, even the less conventional ones. Marrying into wealth is, statistically, a way some individuals accrue significant assets. While romance is often the primary driver for marriage, for some, financial considerations play an undeniable role. Census Bureau data shows a noticeable wealth disparity between married couples and single individuals, with married households often having higher net worth due to combined assets and dual incomes. This isn't a financial strategy you actively plan in the traditional sense, but it is a real-world factor in wealth accumulation for many. And he simply says, to each their own, as long as hearts are truly aligned. While marrying a wealthy partner can provide access to resources, it also comes with its own set of complexities, legally and emotionally. Prenuptial agreements are common in such unions, designed to protect pre-existing assets. The wealth accumulated within the marriage can also be significant through shared investments and ventures. The key takeaway, from a purely financial perspective, is the pooling of resources and potentially, access to a wider network and investment opportunities. However, Day advises, true partnership builds wealth not just in the bank, but in life. Be mindful of why you're really together. Let's be frank, can you get rich through gambling? Yes, theoretically. The lottery, casinos, sports betting, they all offer the tantalizing promise of instant wealth. However, the odds are overwhelmingly stacked against you. The National Council on Problem Gambling states that the probability of winning a major lottery jackpot is astronomically low, often less than 1 in 300 million. While a handful of individuals hit it big, the vast majority lose money. This isn't a realistic strategy for wealth building, it's entertainment with a negative expected return. Day warns, chasing luck is like chasing the wind, you might feel a breeze, but you'll never catch it. The appeal of gambling often lies in the illusion of control or the one big win fantasy. However, for every success story, there are countless tales of financial ruin. Problem gambling devastates individuals and families, diverting funds from legitimate wealth-building opportunities. From an analytical standpoint, investing in gambling is a statistically poor decision compared to, say, long-term stock market investments or entrepreneurial ventures. Don't mistake a momentary thrill for a sustainable financial strategy. Day is firm, if you want to build wealth, build skills, build businesses, build investments. Don't build debt at the casino. We touched on content creation, but let's dive deeper into influencer marketing as a dedicated wealth path. This isn't just about sharing opinions, it's about strategic personal branding and direct monetization. Industry reports show that micro-influencers, 10K to 100K followers, can earn $100 to $500 per sponsored post, while mega-influencers, 1M plus followers, command $10,000 to $1 million per post. The market is maturing, with brands increasingly investing in authentic connections. It's a multifaceted business requiring skills in content production, marketing, sales, and negotiation. Inflation even makes brands seek more cost-effective digital marketing, benefiting influencers. And influencers' income streams are diverse. Beyond brand sponsorships, creators leverage affiliate marketing by promoting products and earning commissions. E-commerce, selling their own merchandise or digital courses, is another significant avenue. Patreon and other subscription platforms enable direct support from loyal fans. A 2023 Creator Economy report estimated that creators selling digital products could see profit margins of 70 to 90%. This diversification creates resilience against market shifts and allows for scalable income. Day says, the internet is a giant bazaar, and if you have a unique stall and a good pitch, the customers will come. However, the influencer space is becoming increasingly saturated. Standing out requires exceptional quality, unique personality, and savvy marketing. The algorithms that dictate visibility are constantly changing, making consistent reach a challenge. Furthermore, the creator burnout phenomenon is real, with the pressure to constantly produce content leading to mental health issues for some. This isn't an easy path to riches, but for those who can navigate its complexities and build a genuine connection with their audience, the financial rewards can be substantial. Day observes, the digital stage is bright, but only a few truly shine for long. Often, the most robust paths to wealth involve combining several of these strategies. Imagine a doctor, high-income career, who also invests wisely, disciplined saving, owns a successful medical practice, entrepreneurship, and creates educational health content online, content creation. This multi-pronged approach diversifies income streams and mitigates risks. For example, a senior software engineer who also builds and sells niche software products as a side hustle creates multiple leverage points for income and asset growth. This synergy makes your financial portfolio far more resilient against inflationary pressures. It's about building a financial fortress. Let's revisit real estate, often considered an inflation hedge. During periods of rising prices, property values and rental income tend to increase, acting as a natural buffer. Mortgage rates might rise, but existing fixed-rate mortgages become cheaper in real terms. A 2023 report by the National Association of Realtors showed that median existing home sales prices continued to rise year over year. Investing in rental properties or REITs can provide passive income and capital appreciation. However, it's not without risks. Market bubbles, maintenance costs, and interest rate hikes can all impact returns. Day says, bricks and mortar can be golden, but only if the foundation is strong. Beyond real estate, tangible assets like gold and other commodities have historically served as inflation hedges. When fiat currencies lose purchasing power, hard assets often retain or increase their value. Gold prices saw significant gains during periods of high inflation in the 1970s and early 2000s. The World Gold Council reports that gold has historically provided positive returns in years of high inflation. However, commodities can be volatile and don't generate income like dividends or rent. They are primarily a store of value. Day reminds us, a piece of gold might not pay your bills, but it will always hold its shine when paper money wilts. Perhaps the most fundamental investment, often overlooked, is in yourself through education and continuous skill development. A higher education degree consistently correlates with higher lifetime earnings. The Georgetown University Center on Education and the Workforce reported that bachelor's degree holders earn an average of $1.2 million more over their lifetime than high school graduates. Beyond formal degrees, acquiring new, in-demand skills through certifications or online courses can significantly boost earning potential. This is a depreciating asset in an inflationary economy. You must continuously upgrade your skills to remain competitive and increase your value. Day's ultimate advice: your brain is your best asset. Ultimately, becoming rich isn't solely about the specific methods, it's also about mindset. Resilience, perseverance, financial literacy, and an ability to adapt are critical. The wealthy often share common traits: they take calculated risks, embrace learning from failures, and constantly seek opportunities. They understand that inflation, while a challenge, also creates market inefficiencies and new demands. A growth mindset allows you to see these shifts not as obstacles, but as chances to innovate and provide solutions. Day often says, your attitude is more valuable than your net worth, because a good attitude can build a great net worth. So, what does your financial plan for 2026 look like? It should involve a combination of strategic elements. Kind, list. Label, 2026 Wealth Plan. Items, diversified investments, stocks, real estate, crypto. Skill development and career advancement. Entrepreneurial ventures or side hustles. Inflation hedging assets, commodities, property. Disciplined saving and compounding, ***. Remember, diversification is your shield against market volatility and inflationary pressures. Don't put all your eggs in one basket, especially when the economic winds are shifting so rapidly. A balanced approach is not just prudent, it's essential for sustainable wealth growth. While we focus on individual strategies, remember the broader economic forces at play. Government policies, central bank decisions, and global geopolitical stability significantly influence inflation and market dynamics. For example, fiscal spending measures can inject demand into an economy, potentially fueling price increases. International trade agreements and disruptions also impact supply chains and commodity prices. Staying informed about these macro trends is crucial for making smart financial decisions. Day says, the big machine of the world keeps turning, and understanding its gears helps you navigate its path. While our focus is 2026, true wealth is built with a long-term vision. These strategies aren't just for the next 2 years, they are principles for a lifetime of financial health. Inflation will likely remain a factor, albeit with varying intensity. The ability to adapt, continuously learn, and make informed decisions will be your most valuable asset. The journey to becoming rich is rarely a straight line, but with perseverance and the right knowledge, it is achievable. Day assures you, keep your eyes on the horizon, but always watch your step. So there you have it, my friends. We've explored the landscape of persistent inflation and charted realistic courses to becoming rich by 2026. From the established paths of high-income careers and disciplined investing to the dynamic worlds of entrepreneurship and content creation, the opportunities are there for those willing to seize them. Remember, knowledge is power, and taking action is the key to unlocking your financial potential. Don't just watch prices rise, rise with them. Now, go forth, apply what you've learned, and let's make 2026 your year of prosperity. And don't forget to like, share, and subscribe for more daily wisdom.